But I'm going to get to the bulls versus bears segment. Now, this is an interesting thing that we do on the show. We take one stock which is in focus and we give you both sides of the story. So today we're talking about Hyundai Motors. Numbers were okay, pretty good actually. The stock saw a bit of a hit in Friday's trade, but today we have a whole slew of brokerages which are quite positive on Hyundai. Puneet is giving us both sides of the argument.
Well, thank you for that. So definitely a result that surprised the markets on the EBITDA side, and that's one of the first bull cases essentially in this argument. EBITDA boost led by lower discounts. Discounts were at 2% of average selling prices versus 2.6 in the previous quarter. That helped the margins. The higher average selling prices was also another key factor. That's the first bull case. In terms of the bear case, though, is the performance of the company in terms of sales. Now, last year, the sales actually fell by 2% versus industry growth of 3%. So there was a 5% divergence. They're also expecting FY26 just to be industry growth expectations, at least for the domestic market. 7 to 8% for the export market, but that's largely, just industry growth also, but the company couldn't achieve that in FY25. So that's going to be one of the other key questions. The industry growth essentially is not something very strong that could move the needle for the company going forward. So that's the first bear case. When you look at the second one, in terms of bull and bear cases, we have the new Pune plant that the company had acquired from General Motors last year. They are expected to start that in Q3 of FY26 and add roughly about 1.5 to 2 lakh units per year. And that will take their, once the whole plant is ready, it will take their overall production to more than 10 lakh cars. But on the other hand, the lower utilization as well as the startup cost will hit the margins in FY26, and any hope of recovery in margins into next year now seems a little difficult with the lower sales expectations as well as hit on the margins because of the startup costs. So that's another key negative to watch out for. The third case is, of course, the new launches. You could plan 26 new launches, what the company has said. 8 of those will be in the next 2 years. This will, of course, include refurbishments as well. So that's a key positive, at least in terms of launch pipeline going forward. But the company's market share is at a 20-year low. Back in 2002, the company's market share was 13%. It's still that number. And that hasn't been a very strong performance for a company been in India for the last 2 decades. It's now been, Mahindra is very close to knocking on its doors on terms of market share. So is Tata Motors. And now even its sister company, Kia. So that's something to watch out for going forward, because we've also seen new launches from Kia that's been very accepted. Mahindra, we've spoken about enough in terms of the listed space as well. And finally, in terms of valuations, at 24 times price to earnings, we've put it in a bull case that's aligned with its peers of Maruti as well as Mahindra and Mahindra. But currently what's interesting is that last year we saw 2 players, which was Maruti and Hyundai, get affected because of essentially lower sales. But for Maruti, they did not have a product ready at that time. The same can't be said for something like a Hyundai. Hyundai had a product, they also had a balanced portfolio. So what led to the fall in sales and underperformance versus the industry, that's something to talk about. Seems to be gaps in the portfolio. That's something that investors have to answer. So it's essentially, what are you paying the same valuation for? That's the key question for Hyundai going forward. But for now, this is the kind of bull and bear case that we're presenting. Do tune in tomorrow at 9:40. We have a special management conversation lined up for the results as well. But for now, that's the bull as well as the bear case for Hyundai.
Okay, so well put, Siddharth Khemka. Somehow, Hyundai, as far as the street's appreciation is concerned, has not seen as much love as some of its peers. Do you think that that's about to change?
Yeah, I think the major concern has been about the growth both for Hyundai as well as for Maruti, and we have seen that what the market is pricing in is the market leadership that both these companies have. Despite all the 26 new launch pipeline and all those things, our earning estimates are only 7% volume growth for the next 2 years. So that's the kind of growth, and you are giving a valuation of 26, 27 times. There are product gaps which the company will fill over the next 2 years. And also the new plant that is coming up, the startup cost of the Pune plant, that will also impact earnings in the near term. Clearly, a lot of growth is back-ended, and I would say that don't expect the stock to react very positively in the near term. Is it a good stock to hold in the long term? Definitely, it is one of the larger private vehicles, you can say the passenger vehicles company in India. Market leadership and the new launch pipelines, especially on the EV and the SUV front, that should drive volume growth. But a lot of it would be back-ended, as I said, FY27, FY28 would be where the growth would come by, and maybe that is the time when market would start rewarding the stock as well.
Interesting. Himen, you want to weigh in with regard to your views with regard to PV plays in particular? A Hyundai, sure, but also a Maruti and an M&M. Do you have a view on any of these?
Harsh, M&M is and Maruti are the slightly easy ones. Okay, Maruti has been range bound for almost a year and a half now, but there is a distinct positive tinge to the chart setup. Okay, we need to take out 13,060 and then 13,450, but one gets the feeling that the breakout chances on the upside are much higher than on the lower side. So yes, Maruti looks quite positive. And even Mahindra. Frankly speaking, in this decline, when we saw it go closer to 2,400, should have gone to 2,100, keeping the quantum in mind. But it's so resilient, Harsh, that it's come back about 2,650. The range is between 2,650 and 3,222. So I think that's one of the strongest four-wheeler stocks. So that looks good. Coming back to Hyundai, I don't have that much of data to take a very longer term sort of a call, but we are walking into a virtual roadblock at around 1940. We are in a short and medium term uptrend. The bias has turned up as far as Hyundai Motor is concerned. So whether you look at Mahindra, which looks good, Maruti looks even more better, or Hyundai, they all seem to be in intermediate uptrends and indicating we want to go further if you have a 3 to 6 month point of view, Harsh.
Well, thank you for that. I mean, fully understand why the view on Hyundai may not be as clear, but just some levels, of course, for viewers to keep in mind for perspective. Charts will be too small to actually determine the exact numbers. But what we're going to do is we're going to slip into a very short break. On the other side, we'll get you top BTST picks, and we'll also talk about the brokerage note of the day. We have CLSA's very interesting view on NCC. Very strong upside. Stay tuned.